You're not going to make it as a trader if you skip the first 90 days. That's just the truth. Most people blow up their accounts in month 2 because they never learned how to think like a trader. They learned how to click buttons. Big difference. So let's talk about what actually matters in your first 3 months. Not what sounds cool on Twitter. Not what some guru sold you in a course that promised you'd be rich by summer. What actually separates the people who survive from the people who donate their savings to the market. First thing, you need to accept that the first 90 days are about one thing only: building your foundation. That's it. You're not here to get rich. You're not here to prove you're smart. You're here to learn a skill that takes years to master, and you're starting at 0. Embrace that. Day 1 through day 30. This is your observation phase. You should be watching the market every single day. Not trading it, watching it. Open your charts. Pick 2 or 3 instruments. Maybe ES futures and euro dollar. Maybe crude oil and the dollar index. Doesn't matter. What matters is, you watch the same instruments every day. You start to notice patterns. You start to see how price moves during New York open versus London close. You start to feel the rhythm. This is not something you can skip. Most people do. That's why most people fail. During this first month, you're also consuming education. You're learning what support and resistance actually means. You're understanding why everyone talks about risk management. You're figuring out the difference between a trend and a range. Concepts, big picture stuff, not systems, not exact strategies yet, just the language of the market. Month 2 is where you start paper trading, fake money, simulated environment. And I know what you're thinking. Paper trading is boring. It doesn't feel real. You're right. It doesn't feel real. That's exactly why you need it. Because in month 2, you're learning to execute without emotion. You're testing ideas. You're seeing what happens when you take a trade too early or too late. You're building muscle memory. The goal here is not to make fake money. The goal is repetition. You want to take 50 trades, 100 trades. You want to mess up in an environment where it costs you nothing. This is also when you start journaling. Every single trade, what you saw, why you took it, what happened, how you felt. The journal is not optional. It's the difference between random gambling and structured learning. Your journal becomes your feedback loop. It shows you your patterns, your mistakes, your growth. Month 3 is the bridge. You're still paper trading, but now you're refining. You're noticing which setups you actually understand versus which ones you're forcing. You're building a routine. Market prep in the morning, trading during your focus hours, review at night. You're becoming consistent. That's the word. Consistent. Not profitable yet. Consistent. And here's the thing nobody tells you. These 90 days are a filter. They filter out everyone who wants quick money and keeps the people who actually want to build a skill. If you can show up every day for 90 days, if you can watch the market when it's boring, if you can paper trade when your friends are out making real money in crypto, then you might have what it takes. Because trading is not about being smart. It's about being disciplined. It's about controlling your emotions when you're up and when you're down. It's about following a process even when you don't feel like it. The first 90 days teach you that, or they teach you this isn't for you. Both are valuable lessons. So if you're serious, start now. Pick your instruments, open your charts, commit to the process. And if you want the exact framework, the full system, the step-by-step structure we use to take traders from 0 to consistent, that's coming soon for the people who are ready to go deeper. Check out marketdecoded.com when you're ready to level up. Until then, stay patient, stay focused, and I'll see you tomorrow.